quantitative easing, the second round of that, everyone's talking about QE3, QE4, potentially QE5. Then you've got this debt scenario that is playing out in Europe. Which currency faces the biggest challenges going forward?
As far as I'm concerned, they're both equally bad. It's just a function of whereabouts in the phase are we. So in the run-up to so-called QE2, which is more like an extension of QE1, but let's just call it QE2, we had the dollar coming under pressure. Now all of a sudden, and the euro has been backed at that stage because there was no reason for the euro to undergo some sort of a QE policy. Now all of a sudden, though, we've got Ireland coming to the fore and all of the debt worries. And of course, now people are talking about the ECB having to perhaps step back into the market with a quantitative easing policy of their own. And so the pendulum swings back again.
They haven't been funding these countries with quantitative easing. All they've been doing is essentially each country has been using their funds and funding and buying into the bonds. Is that the way that the fund works?
Essentially, the ECB has been building their balance sheet as well. So the ECB, shortly after the Greece debacle, needed to try and bring down sovereign debt yields in Europe to try and stabilize the whole region. And so they stepped in and they actively purchased sovereign bonds from those countries that were highly indebted, that were finding their bond yields rising. They bought those bonds and helped those bond yields come back down again. I suspect, having seen Spain's bond yields over German bunds this morning having risen to fresh record levels, that we're not far off the ECB being prompted to do a similar sort of stint again. The alternative, if they don't go that route, I think they risk creating a far bigger systemic issue in Europe, and no one wants to see that. So quite honestly, I think it's just a matter of time before the ECB steps in.
Either way, do you think we're going to see a bit of a domino effect taking place in Europe? Because, of course, we've talked about Portugal and Spain. There is concern about Italy and Belgium and other countries as well. And if Italy had to go as a G7 country, I mean, that would really create problems for Europe.
Yeah, the difficulty with Italy, I mean, of course, it's a debt issues there too. But the difficulty with Italy is that they're going through a political uncertainties at the same time, with elections being called and all sorts of things there too. So that makes it difficult to understand what the future of policy in Italy is, and it's a little unclear at this point in time how much to attribute to political issues, how much to attribute to the debt issues, how much of it is contagion. So I would suspect that the ECB is going to look at this and think to themselves they would rather build their balance sheet, embark on a fresh round of quantitative easing, try and stabilize the entire environment, rather than just let it get up ahead of steam. And the next thing you know, you've got a speculative crisis on top of a debt crisis.
Well, George, when you say that we need to create stability in these markets, at the end of the day, we're going to see the debt being rolled over and eventually it needs to be paid back. So, this is the reality of the matter. A lot of the Greek debt that, was rolled over beginning of last year, well, end of last year, is now being rolled over again. So it's literally just something that we have to constantly balance and constantly manage. Do you think that stability is going to prevail in the Eurozone?
It's difficult. I mean, what you've said is effectively 100% correct. What they've done, or what the ECB does, is effectively buy all of these countries extra time to try and hopefully get their books in order. But as we've seen in the case of Greece, they've already been through 8 quarters of economic contraction. We're anticipating they're going to probably go through another 8 before things start to stabilize in that country. So we're talking 4 years of constant economic contraction, all related to the austerity measures that have been implemented. That's a huge amount of pain to take. And in the interim, their debt levels are still rising. They're still rising, they're still rising. So it's got to get to a point where the ECB recognizes that they've got to try and stabilize and buy time for these countries to hopefully get their books in order. If at the end of another 3 or 4 years we're sitting in a position that much worse, I'm afraid the outlook doesn't look particularly good. But for the time being, I think they've already painted themselves into a corner. They've shown their hand, and we know the way that they're going to respond to this or face the alternative, which we know that they don't want to face for political reasons as much as they are economic. And as a result, we think ECB steps in, tries to calm things back down again, buys more time. But you're right, essentially at the end of the day, that doesn't change the fiscal space going forward. it just extends it. It drags it out over a prolonged period of time.
How do you see all of this playing out in the currency markets, George? Because we've had some commentators calling for the euro perhaps to move down to 128 by the end of the year, perhaps even weaker. Would the rand necessarily follow suit? How's this going to put out your rand forecast for the year?
Well, you know, I mean, when we look at rand forecasts, what we do is we look at a structural theme. The structural theme at this point in time is that quantitative easing policies abroad effectively and systematically debase those currencies as they're being implemented. So when looking at the rand, and let's look at it from a trade-weighted basis, what we would look at is a rand strengthening on the back of that, not due to rand strength in and of itself, rand stability relative to all those other currencies in the world that aren't implementing these policies, but strength against those currencies that are implementing the likes of quantitative easing. So strengthening against the major economies of the world, which naturally will translate into a trade-weighted rand that strengthens. But you know, whether the rand finishes the year at 7.20 rand or 7.40 rand is immaterial to me. I think that from our perspective, what we look at is where it's going beyond just the here and now. And to the extent that we believe quantitative easing is a feature of the currency market for a long time to come, we think levels of 6.50 rand or below to the dollar are easily achievable. And similarly, stronger levels against the likes of the euro and even the pound and the yen,
so
as
those
policies
that we're
unfold.
seeing at the moment then?
Yes, we see this as, we don't see this as a structural shift. We don't see this as a major reversal in the trends. We see this as a current blow-off. And ultimately, we think that the rand continues its resilience and strength through the course of next year.
Let's move to Asia and looking at the yuan and the likes of the yen. I mean, we've seen what's been happening with the yen, immense strength coming through. It seems investors using that currency to borrow and then going to other currencies with higher yields. Do you see trends like that emerging with the likes of the dollar and the euro as we start to see weakness coming to the fore?
Look, you know, with the yen, it's an interesting one. As you pointed out, it's utilized as a funding currency. So, of course, when you get a reversal of the risk trade, as they call it, and you see people moving back towards the dollar and whatnot, you will naturally see the yen strengthening as well, because a lot of those carry trades have been funded out of yen. So as those positions in emerging markets unravel, so the yen tends to recover. You've also got the fact that they're producing a current account surplus, and that they've got deflation. So all of those play out into a stronger yen. But it's again part and parcel of a correction.
At what level would you be buying the euro, if at all?
Against which? Against the rand?
Let's say against the dollar.
Against the dollar, I think you're going to have a very broad sideways band in which the euro dollar is probably going to oscillate. And you will have periods of purchasing and periods of selling. I don't think we're near those levels that I would buy the euro, but anything below 120 I would be a buyer. Anything towards sort of 140 I would be a seller. And I think it's going to oscillate between those levels as you get the policies, quantitative easing being brought in on the US, it gradually unwinds, quantitative easing in the euro comes in, and so you get this to and fro effect. Broadly speaking, over the next 2-3 years, it wouldn't surprise me if the euro goes flat, but in an oscillating manner. Insofar as emerging markets are concerned, I see emerging markets going stronger against both those currencies.